Talk Money to Me is a financial podcast produced by TransGlobal. All opinions expressed by the hosts and guests are solely their own opinions and do not reflect the opinion of TransGlobal. This podcast is for educational purposes only and should not be relied upon as basis for investment decisions.
Hey everybody, welcome to Talk Money to Me, where we talk about money and how it affects you. I'm your co-host, Jonathan, and I know a little bit about finance.
And I'm your other co-host, Tracy, and I still don't know anything about finance.
We have two wonderful guests with us today. I'll go ahead and let them introduce themselves.
Hey guys, I'm Daniel and I'm a financial advisor.
Hey everybody, this is Walt. I'm in financial services.
Awesome. Today we're going to be talking about some other stuff. Banks.
And how to rob them.
Yes. Actually, that is one of the questions. But before we get there, we're aware that banks exist. People put money in them. We take money out. But there's so many different ones. I was wondering how people know how to choose a bank. For me, growing up, it was literally just the closest one is the one that I'm going to go to. But is that the right way to go about it? Is that the only way to go about it?
And for me, it's like who has the prettiest logo. So that's how I go about it. That seems right.
Yeah, beauty matters.
See, already right there, we can kind of see like different priorities, right? For me, it's completely different from both of your guys's. I started banking with whatever my parents started banking with, right? Whatever they took me to. What is it that you really need out of your bank? Is it convenience? Do you need them close by? Is it good service? Is it maybe good name brand? Or do you want more benefits from your bank, more services from your bank? All of these things kind of factor when you make a choice.
Yeah, and also I know for some banks, they want to attract customers, so they'll give you a huge incentive to open an account with them. We'll give you up to, if you put like certain amount, with the bank, they'll give you some cash. They'll give you I remember there's one time when I was in Seattle, Washington, I opened a bank and they gave me a really cool MP3 player. And I was like, oh, MP3 player, So back in the days, not cash, but they give you some kind of toy.
Would it be helpful for maybe Walt and Daniel to share a little bit about what you guys look for in banks?
Well, I have Chase, similar to Jonathan as well, is that I want somewhere is close to me. I want the ATM, to be nearby if I need cash, even though I don't really use cash anymore. I want to have some kind of personal interaction with the banker. And then I have an Ally bank account that's for savings.
Same as well, actually. I have a Chase and I have an Ally. But this really kind of illustrates the difference, right? Chase, when I opened that, they offered me a incredible sign-on bonus, like Walt had previously mentioned. My Ally I opened when they were offering a savings interest of 2.25%, which is incredibly high. For me, I looked purely at benefits when I opened these accounts, like what the bank could give me. But that's my priority.
So you sat back and you were like, make me an offer.
Basically, yeah. Or I basically went to every single bank and I was like, what are you giving? What are you offering today?
That's interesting to know because I actually didn't even know that the incentives varied so much. What makes it so that smaller banks giving even better incentives than a really powerful, really big bank like Chase?
I think the best way to think about banks is think of them as a business, kind of like Amazon or Target. They have to get people through their doors. How are they going to do that when the services that they offer are so similar across all different banks? They may offer you more incentives, more bonuses to come over to do business with them instead of going to your traditional big bank like Chase.
Okay, so how do banks make money then?
Average clients, when they place or when they put the money in their bank account, the banks are not really making money from that. But a lot of the money is made, through credit cards, through loans, or the money that you put it into the bank account, they'll use the money to make a loan to somebody else. So those are the different things that banks can actually do to make money off of you. So they rely on that, and then because you're kind of going and talking about the charges or the fees. These are the ways that the banks can actually make a profit.
Are there any particularly common or notorious ones?
Well, one of the common ones, would be overdraft. And overdraft, just think of it that, say if you have like $5 remaining in your checking account, and then you use that debit card to buy like $20, but you only have $5 in the account, then the bank will have to borrow, use their own money to cover for you, and then they're gonna charge you extra for it.
Okay, so then outside of overdraft fees, are there any other fees that banks will normally charge?
Well, one thing that a lot of people probably have experienced before is minimum balance and foreign transaction fee. And I'll talk about minimum balance, which is pretty straightforward. There are certain banks, especially big banks out there, that wants you to keep, make sure that you have a minimum balance every single month, or otherwise they're going to charge you a fee for it.
It really hurts a lot of people, and I would urge, if you know you cannot keep a certain amount of money in your account, like you don't have that much saved up, look for a different bank. Look for someone whose minimum is lower or who doesn't have a minimum at all. It's looking for a bank to suit your needs, not suiting your needs to fit a bank. And foreign transaction fees, like if you want to withdraw money, some banks are more forgiving on if you want to use your money in a different country, right? If you have US dollars in your bank account and you want to travel and withdraw, say, another currency from their bank, they'll allow you to do it and not charge you a fee. Another fee that we really want to look at is ATM fees, right? For me, I have Chase. If I withdraw money from a ATM at the county fair, I get charged a service fee, right, for using a non-Chase ATM. However, if I use my Ally account, Ally has a clause in their accounts that allow me to withdraw from any ATM in the country.
That's actually really interesting because earlier we were talking about like why might you pick a bank, and I just kind of assumed that I had to have ATMs nearby because I needed cash. But you're saying that there are some banks that'll just let you withdraw from any ATM without charging you extra. That's really cool.
Yeah. A lot of these online banks do that actually because they don't have the facilities like these ATMs, physical locations to support that. So they piggyback off of the already infrastructure already in place. And they'll in
some ways that's even more convenient than having the nearest bank, like because any bank is the nearest bank then for that.
Yeah, some may see it as that.
For the average person, we don't own a business, but even if we did, is there anything special about a business account that would make it interesting for a person to have?
I think one word that comes to mind is tax. Having a business account can alleviate a lot of headaches when it comes to tax season. Because think about, you own a business, you have to spend, you gotta, put money in, you gotta take money out, you gotta buy stuff for the business, all those different things. But if all those transactions can be done within just your business account, it'll make things a lot smoother when it comes to tax season.
So you wouldn't have to sort through, this time when I bought pencils, it was for myself. And then this time when I bought pencils, it was for the business. Got it.
It helps you separate your expenses between personal and business, and it helps you consolidate all of your business expenses. Makes one less of a headache. And typically, banks like business clients. So they'll give you maybe a little bit more incentive to open a business account. Yeah.
Are there limits to who can open a business account? So I asked this because I actually... every time someone would mention a business account, I just assumed they meant okay, it's only for small business owners. And I never thought that would apply to me because I'm not entrepreneurial and I don't plan to open any small business anytime soon. But I recently discovered that it applies to self-employed people as well. So that is anybody on the 1099, right? And I didn't know. Nobody told me until the IRS started to take my money. So I am wondering, then is there actually a difference between a business account and a personal account in terms of how the accounts work? Or is it just a differentiation so that you can keep track as an individual?
They basically function the same. They serve the same purpose. What might be different is some of their criteria. Sometimes, if I go to Chase, my minimum for a personal account my account minimum might be $1,500. but my business, and don't quote me on these numbers, but my business minimum might be say $5,000.
Yeah, that makes sense, but it's sad.
Yeah, it is very sad. But the good thing is you can literally open a business account. Anybody can go open a business account. In college, my fraternity opened a business account. And like
nice.
we don't have, we're not a business. We just need an account to consolidate money.
Well, also, does that mean that if you're self-employed, if you're on a 1099 and you just open a second checking account, that could function as a business account because you designated that to be your business account?
Yeah, I think that would be super helpful if you want to kind of separate your personal transactions away from your business transactions.
So it does sound a little bit like the title of business is slightly arbitrary.
100%.
Well, are there advantages? Because you only mentioned a disadvantage, which is that you don't, like, for me, it's a disadvantage, right? Like, if I have a $5,000 minimum, I'm not going to open a business account. I'm going to open a second personal checking account so that I don't have to keep that minimum. But keeping that $5,000 minimum, does that afford you advantages with that account?
Yeah, if this goes back to services that the banks can offer you. If you hold a business account with a certain bank, they may approach you with certain services and products and packages that they offer to help you in your business, right? But if I had gone your route and just opened up a personal account, they may never know that I am actually running a business or I'm a self-employee, and they'll never give me those offers. So, for example, during 2020, the stimulus package offered a what's called the Payment Protection Program, the PPP plan. It's just a stimulus package to help small businesses keep their employees on payroll during COVID last year.
Yeah.
So if you had a business account, you were much more likely to get a notice from your bank saying, hey, we offer PPP. Do you need help applying? Whereas if I had two personal accounts to separate my business expense and my personal expenses, the bank may never know that I'm actually running, like that is my purpose. They might just think, oh, well, Daniel has two personal checkings accounts. Okay, that's it.
Now that we kind of understand how banks make their money through fees, through charging for loans and, credit card, debit card transactions, what happens during a bank robbery? You see it a lot in movies. I personally have been near one, and the next day the business was just up and running again. So how does a bank, I guess, like bounce back so quickly?
Right. I think the question, the underlying questions for such an example is about how safe is my money in the bank, right? And I think one thing that people probably have heard of, and most major banks, if not all banks, should have this, is, they have this FDIC, like insured banks, where the money that you put it in the bank account, they is insured up to a certain minimum. And then if something would happen to the banks, whether, through a bank robbery or if the bank folds or, went bankrupt, then your money is still going to be safe.
Yeah, so the FDIC, which stands for Federal Deposit Insurance Company, insures up to $250,000 of each individual who has money at banks. Banks have a system where they have to tally up the amount of cash that they hold every night and list it in their kind of private system. So if they're above, depending on the branch size, if they're above or below their limit, they can either borrow money from surrounding banks or loan out money from surrounding banks, right? And if you get robbed, you can start pulling cash from surrounding banks to kind of replenish the cash so that you can keep doing business as usual the next day.
It would still have to be from like similar branches, right? Like a Wells Fargo branch couldn't pull money from a Chase bank.
Oh, they absolutely could.
Oh, still could.
They absolutely could.
Even though they're competitors.
Yeah, even though they're competitors. And the banks are still just an extension of our Federal Reserve, right? It all runs through our government, and
Big Brother controls everything. That's
Big Bank controls everything.
Big Brother, BBB.
Big Bank Brother, Big Brother Bank.
Better Business Bureau.
It's just a cover up. We know what BBB truly stands for.
Actually, so you heard it here first, listeners. Your money doesn't have any value. You're just waving pieces of plastic around. None of it matters. Nothing matters. So.
All right. with that, we'll go ahead and draw this conversation to a close. Thank you guys so much for joining us on today's episode. We'll catch you at the next one. Bye.